Welcome to the deep dive. Today we're taking a closer look at Mankind Pharma.
Yeah, we've got our hands on their latest board docs, the investor presentation, earnings call info, basically the full picture.
Exactly. And our goal here is simple. Pull out the key takeaways, what's driving their performance, where they're headed, all served up so you can get the insights quickly and clearly.
Right. Got board meeting minutes, auditor reports, the official stuff, plus that Q4 FY25 investor deck and snippets from the earnings call gives us a pretty solid rounded view.
Okay, let's jump right in. Financials, Q4 and the full fiscal year 25. What's the big story the numbers are telling us?
Well, the headline is definitely growth. Strong growth. Consolidated revenue shot up 27.1% year-on-year in Q4. That's INR 3,790 million.
Oh, wow, okay. 379 crore. And for the whole year?
Still very strong. Up 19% year-on-year for FY25. That takes them to INR 12,270 million or 1,227 crore. So, yeah, positive momentum is clear.
And is that coming mostly from within India, their home turf?
It seems like it. The domestic business grew 18% in that last quarter. A big chunk of that is their chronic segment performing well, plus the impact of bringing BSV Limited into the fold.
Ah, yes, BSV. We'll circle back to that. But sticking with the domestic side, that chronic segment performance, what's special there?
Well, even if you sort of set aside the BSV contribution for a moment, their chronic share climbed to 39.2% in Q4. And the really interesting part, they grew faster than the overall Indian chronic market.
Faster than the IPM, the Indian pharmaceutical market.
Yeah, by about 1.3 times faster for chronic drugs. It means they're not just benefiting from a rising tide, they're actively gaining market share. That's significant.
Right, and I heard something about successful new launches helping too.
Definitely. Empagliflozin, that's their anti-diabetic drug, really took off. Grabbed over 8% volume share by March 25. It's already like one of the top 3 launches in that space. Shows they can really execute on new products.
Okay, and what about outside India? International business.
That saw a huge jump too. Revenue actually doubled in Q4 FY25 compared to the year before hitting INR 5,350 million or 535 crore.
Doubled. Wow.
Yeah. And for the full year, international growth was 88%. Now that includes both their existing international efforts and the boost from BSV. But still, it shows a serious expansion of their global footprint.
Okay, profitability. Let's talk EBITDA, margins. How efficiently are they operating?
So the adjusted EBITDA margin for Q4 was 23.1%. For the full year, it was around 26%. EBITDA earnings before interest, taxes, depreciation, amortization, it's a good measure of core profit.
And 26%, is that good? Stable, improving.
It's pretty healthy. And interestingly, their gross margins actually went up. They put that down to better pricing power and selling more of those higher margin chronic meds we talked about. A favorable mix, basically.
Makes sense. Okay, you mentioned BSV Limited a few times. That acquisition seems pretty central to the story. Let's dive into that. When did it happen? How's the integration going?
Right. So the deal closed in October 2024. That means Q4 FY25 was the first full quarter with BSV fully consolidated in the numbers. FY25 overall includes about 160 days of BSV's contribution.
And the integration process, merging the businesses.
It's underway. They're working on aligning BSV's prescription business onto Mankind's platform, streamlining things.
Are they expecting cost savings or other benefits? Synergies?
They are. They've put a number on it. Aiming for INR 500 million to 1 billion, that's 50 to 100 crore in synergies over the next 1 to 2 years.
Okay. Where would those come from?
Things like combined sales forces, better purchasing power, optimizing logistics, that sort of thing. They mentioned completing some initial optimization work back in March. Hitting those synergy targets will be key, obviously.
And what about BSV itself? What kind of growth are they projecting for just that part of the business?
They seem quite bullish on BSV. They're guiding for 18–20% growth for it next year. So they clearly see a lot of potential there.
And its profitability, margins for BSV.
Right now, BSV's margins are sitting around 26–27%. The plan is to nudge those up gradually by about 50 to 100 basis points a year.
Basis points, so 0.5% to 1% improvement annually.
Exactly. With a longer-term goal, maybe out to FY30, of hitting 30%. But they also note that it'll depend on R&D investments within BSV, which they plan to increase.
Okay, so looking forward then, what's the big picture strategy for Mankind? What are they telling us about the future?
They talk about 4 key pillars. 1, keep the core base business steady. 2, push hard on that fast-growing specialty chronic segment. 3, build up their OTC, the over-the-counter business, and 4, leverage BSV for that high-entry barrier super specialty stuff.
Right, a multi-pronged approach. Any specific growth targets for the overall domestic business?
Yeah, for FY26, they expect to outperform the IPM, again, the total Indian market, by around 1.2 times, so growing faster than the average.
And they're backing that up with more R&D spending.
It seems so. They plan to increase R&D spend from 2.1% of revenue in FY25 up to maybe 2.53% in FY26. That investment is likely aimed right at those specialty and super specialty pipelines.
And overall profitability for next year, FY26, what's the guidance?
They're projecting an EBITDA margin somewhere in the 25–26% range, so aiming to maintain that strong profitability level.
Beyond the financials, what else are they focused on strategically?
Well, they mentioned things like improving how they engage with doctors, using more digital tools internally, upskilling their people, and just generally optimizing how they run things.
Okay.
They also said they've finished some restructuring in their mass market, or acute business think short-term illness meds. They expect growth there to bounce back from Q2 of FY26 onwards.
Good to hear. And are there big established brands still pulling their weight?
Oh, yeah. Brands like Neurokind and Telmakind, they both brought in over INR 500 crore in revenue each in FY25. So those core products are still very strong anchors.
Right. What about exports? You mentioned the big jump, but what's the outlook?
It's a bit mixed. They expect single-digit growth for the original Mankind export business, but they see BSV's international side growing much faster, maybe over 20%.
Interesting. And the consumer healthcare part, OTC.
Margins there are currently in the high teens. They expect that to improve as it gets bigger. It's about 7% of the total business right now.
Okay, let's shift gears a bit. Corporate governance, compliance, the nuts and bolts of how the company is run. Any key updates there?
A few things. They reappointed their cost auditors, M.K. Kolshrestha and Associates, for FY26.
Yeah.
And they appointed new secretarial auditors, Amit Gupta and Associates, for 5 years starting April 1st, 2025, though that still needs shareholder approval.
Standard procedure sounds...
Pretty much. Ensures that independent oversight. They also increased the corporate guarantees for 2 subsidiaries, Packtime Innovations and Mankind Prime Labs, basically providing more financial backing.
Okay.
And they're setting up a new subsidiary in Sri Lanka. That's obviously pending regulatory green lights, but it signals more international expansion intent.
And the auditor's reports on the actual financials. Any red flags?
Nope, sounds clean. The main auditor, Bhagi Pardwaj Gower & Co., gave an unmodified opinion on the consolidated results. That's basically a clean bill of health.
Good.
And separate reports confirmed they were complying with all their financial loan covenants as of March 31st, 2025. So, ticking the boxes there.
Okay, let's look at some key ratios, performance indicators. Anything stand out?
Well, net debt to adjusted EBITDA was 1.8x for the year. That suggests debt is pretty manageable relative to earnings.
1.8 times. Okay.
Return on capital employed, ROCE, is interesting. It was 11% with BSV included. But if you look at Mankind without BSV, it was way higher, like 40%.
Wow, big difference.
Yeah, it just shows the initial impact of a large acquisition like BSV on that specific ratio. It takes time for the returns from the acquired assets to fully kick in and balance out the increased capital base.
Makes sense. Any other metrics?
Working capital days were stable at 45 days. That's good, means they're managing their short-term cash flow efficiently. And market share, as we touched on, increased from 4.4% to 4.8% over the year, partly helped by BSV.
And that focus on chronic conditions like cardio and anti-diabetic meds is clearly visible in their performance there.
Absolutely. They keep highlighting their consistent outperformance in those areas. It really reinforces that strategic push to grow the chronic side of the portfolio.
Right. Finally, ESG, environment, social governance. Important these days. What are they highlighting?
They mentioned several initiatives, renewable energy use, water recycling, safety improvements.
Yeah.
They also put out an ESG fact book for FY24 with extra disclosures going beyond just compliance.
Okay.
And they've developed a biodiversity policy too, so showing increased attention to those environmental and social aspects.
Okay, so let's try and wrap this up. It really feels like Mankind Pharma had a strong year financially. Growth looks solid, driven by both the core domestic business, especially chronic meds, and that big BSV acquisition.
Definitely. And the strategy seems clear. Keep pushing into chronic and specialty areas, leverage BSV, aim for market-beating growth, and maintain healthy margins.
The integration of BSV and the restructuring of the acute business seem like key things they need to execute well on for that continued growth.
Precisely. It seems like the foundations are being laid. This deep dive shows a company actively shaping its future, focusing on higher growth segments through organic efforts and strategic buys.
So, a final thought then for you, our listener. Given everything we've discussed, Mankind's strategy, the BSV integration, the dynamics of the Indian pharma market, what potential hurdles or maybe unseen opportunities might really shape their path forward?
Yeah, and specifically thinking about that move into specialty and super specialty drugs via BSV, what aspects of that integration and performance will be absolutely crucial to keep an eye on over the next few years? It's certainly a company in transition, and execution will be everything.